Christina, a 31-year-old childcare worker, was facing an unexpected car repair bill when she encountered a lender that would test her knowledge of legitimate short-term lending and teach her valuable lessons about phantom debt payday loan scams. She received a call claiming she owed money on a payday loan she had never taken. Christina had never used payday loan services and managed her finances carefully on her childcare center salary, but she received an aggressive phone call from someone claiming she had defaulted on a $400 payday loan from 2 years earlier. The caller, who identified himself as Collection Agent Martinez, claimed to be from Fast Cash Recovery Services and insisted that Christina owed $1,850 on an original $400 loan that had accumulated fees and interest over time. Ms. Henderson, you took out a $400 payday loan from Quick Money Express in March 2022, and your account is now in default with a total balance of $1,850, including fees and collection costs, Martinez said with apparent collection authority and debt tracking knowledge. This debt has been referred to our recovery department, and you must make payment arrangements immediately to avoid legal action. Martinez claimed that Christina had provided her social security number and bank information when applying for the original loan, and that failure to pay would result in wage garnishment and criminal charges for check fraud. Ms. Henderson, payday loan defaults are treated as criminal matters because they involve check fraud and theft by deception. Martinez continued with apparent legal knowledge and criminal consequences authority. If you don't resolve this debt immediately, we'll file criminal charges and pursue wage garnishment through the court system. Martinez offered to settle the debt for $925 if Christina could make payment within 24 hours, claiming this would prevent criminal prosecution and save her money on additional legal fees and collection costs. Christina was confused because she had never taken out a payday loan and couldn't understand how such a debt could exist, but she was frightened by the threats of criminal charges and wage garnishment affecting her childcare job. I've never taken out a payday loan from any company, Christina explained to Martinez. There must be some mistake because I don't use payday loan services and have never borrowed money from Quick Money Express. Martinez became aggressive when Christina denied the debt, claiming that she was lying about the loan and that attempting to avoid legitimate debt obligations was itself a criminal offense that would result in additional charges. Ms. Henderson, denying legitimate debt is fraud, and we have all your application information, including your social security number and employment details, Martinez insisted with apparent documentation authority and fraud accusation knowledge. Your denial of this legitimate debt will be reported as additional fraud, and criminal charges will include both the original check fraud and the additional fraud of debt denial. Martinez also threatened to contact Christina's employer about the criminal debt and wage garnishment proceedings, claiming that her childcare job could be affected by criminal financial charges. Christina felt panicked about potential criminal charges and job consequences, but decided to research payday loan collection procedures before making any payments or admitting to debts she didn't remember taking. Christina contacted her state's Attorney General office to report the debt collection call and learned that phantom debt scams often target people by claiming payday loans that never existed. The Attorney General's office explained that legitimate payday loan collection involves proper debt validation and that collectors cannot threaten criminal prosecution for civil debt obligations, regardless of the original loan terms. Christina also learned that payday loan records would show actual application and approval documentation, and that legitimate lenders could provide specific information about loan dates, amounts, and payment history. Christina realized that Martinez was attempting phantom debt fraud by claiming a payday loan that never existed and using threatening tactics to pressure her into paying money for fabricated debt obligations. Christina contacted Martinez to inform him that she had verified the debt as non-existent, but discovered that the phone number was disconnected and that Fast Cash Recovery Services had no legitimate business registration. Christina reported the phantom debt scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and her state's debt collection regulatory agency. She learned that phantom payday loan scams were common because scammers assumed people might not remember small loans. The authorities explained that legitimate debt collection requires proper validation and that consumers have rights to dispute debts and request verification before making any payments to collection agencies. Christina learned that phantom debt collectors often use aggressive tactics and false legal threats to pressure victims into paying for debts that don't exist, especially targeting people who might be confused about past financial transactions. The experience taught Christina to always request debt validation in writing and to never make payments based on threatening phone calls claiming debt obligations that she couldn't verify through her own records. Christina now educates other childcare workers about phantom debt scams and emphasizes that legitimate debt collection follows established procedures and never involves threats of criminal prosecution for civil debt disputes. Marcus, a 28-year-old warehouse worker, needed emergency cash when he encountered an online lender that would test his understanding of legitimate lending practices and teach him valuable lessons about advance fee payday loan scams. The lender promised guaranteed approval but required upfront fees before processing his loan. Marcus was facing a utility shutoff notice and needed $350 quickly to avoid losing electricity, making him interested in payday loan options that could provide immediate cash without lengthy approval processes. Marcus found guaranteed cash loans through an online search and was attracted by their advertising promising guaranteed approval. Bad credit okay. Get cash in 1 hour, which seemed perfect for his emergency situation. The website appeared professional with customer testimonials and official-looking loan application forms that requested basic personal and employment information for immediate loan processing and approval. Marcus completed the online application and received an immediate phone call from loan specialist Johnson, who confirmed that Marcus was approved for a $350 loan with simple repayment terms. Mr. Williams, congratulations on your approval for a $350 emergency cash loan with flexible repayment options, Johnson said with apparent loan approval authority and emergency lending expertise. Your employment verification and credit review show that you qualify for our guaranteed approval program with immediate funding availability. Johnson explained that the loan would be deposited directly into Marcus's bank account within 1 hour of processing, and that repayment would be automatically debited in 2 weeks when Marcus received his next paycheck. Mr. Williams, our emergency loan program provides immediate cash relief for working individuals who need short-term financial assistance. Johnson continued with apparent emergency lending knowledge and working customer expertise. The automatic repayment system ensures convenient loan resolution without requiring additional paperwork or payment processing on your part. Johnson requested a processing fee of $85 to complete Marcus's loan approval and begin the immediate funding process, claiming that the fee covered credit verification and banking transfer costs required for emergency loan processing. Marcus was concerned about paying an upfront fee for a loan but felt pressured by his utility emergency and Johnson's assurance that the fee was standard for guaranteed approval lending. I need the loan quickly, but I'm not comfortable paying fees before receiving the loan money, Marcus explained to Johnson. Can you deduct the processing fee from the loan amount instead of requiring upfront payment? Johnson became insistent when Marcus questioned the fee structure, claiming that emergency loan processing required upfront fees to ensure immediate approval and that legitimate borrowers understood the necessity of processing costs. Mr. Williams, emergency loans require immediate processing fees to guarantee approval and ensure funding within 1 hour. Johnson insisted with apparent emergency processing knowledge and approval guarantee authority. Legitimate borrowers understand that processing fees demonstrate commitment to repayment and allow us to provide guaranteed approval regardless of credit history. Johnson also claimed that the processing fee would be refunded if Marcus wasn't satisfied with the loan terms and that delaying fee payment would result in losing his guaranteed approval status. Marcus felt pressured by the utility deadline but decided to research payday loan practices before paying upfront fees for emergency lending services. Marcus contacted legitimate payday lenders and learned that established lenders deduct fees from loan amounts rather than requiring upfront payments, and that advance fee requirements were red flags for lending scams. Marcus also researched guaranteed cash loans online and discovered that the company had numerous complaints from customers who paid processing fees but never received promised loans. Marcus realized that guaranteed cash loans was operating an advance fee scam by collecting processing fees from desperate borrowers who never received actual loan funding. Marcus contacted Johnson to inform him that he had discovered the advance fee scam, but found that the phone number was disconnected and that the company's website had been taken down. Marcus reported the advance fee loan scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and his state's lending regulatory agency. He learned that advance fee loan scams often target people facing financial emergencies. The authorities explained that legitimate payday lenders never require upfront fees, and that borrowers should be suspicious of any lender requesting processing fees before providing loan funds. Marcus obtained emergency assistance through a local community organization and later secured a small loan from his credit union at reasonable terms without requiring upfront fees or processing costs. The experience taught Marcus to research lender legitimacy before paying any fees and to be suspicious of guaranteed approval claims that require upfront payments for loan processing. Marcus now educates other warehouse workers about advance fee loan scams and emphasizes that legitimate lenders provide funds before collecting fees and never require processing payments for guaranteed approval programs. Samantha, a 33-year-old retail manager, was managing a temporary financial shortfall when she encountered a lender that would test her knowledge of legitimate loan terms and teach her valuable lessons about rollover trap payday loan scams. The lender made repayment seem easy but designed loans to trap borrowers in cycles of debt. Samantha needed $500 to cover rent while waiting for a delayed insurance reimbursement and was attracted to payday loan advertising promising quick approval and easy repayment terms that seemed manageable for her situation. The payday lender, Quick Cash Solutions, was located near her workplace and advertised fast approval, easy terms, get cash today, which seemed convenient for her temporary financial need and work schedule. Samantha visited the storefront and spoke with loan officer Davis, who immediately assured her that a $500 loan could be approved quickly with simple repayment terms that wouldn't strain her budget. Ms. Thompson, a $500 payday loan is easy to manage with our flexible repayment options, Davis said with apparent loan management expertise and payment flexibility knowledge. Your retail management income shows that you can easily handle the repayment, and we offer convenient options if you need additional time. Davis explained that the loan would require repayment of $575 in 2 weeks when Samantha received her next paycheck, representing a $75 fee that seemed reasonable for emergency cash access. Ms. Thompson, the $75 fee represents excellent value for immediate cash access and emergency financial relief. Davis continued with apparent fee structure knowledge and emergency lending expertise. This fee is much less than you'd pay for overdraft fees or late payment penalties, making payday loans an efficient solution for temporary financial needs. Davis prepared loan documents showing the 2-week repayment schedule and emphasized that Samantha could easily extend the loan if needed by paying the $75 fee again and extending repayment for another 2 weeks. Samantha was pleased with the quick approval and reasonable-seeming fee structure, but was concerned about the short 2-week repayment period and wanted to understand her options if repayment became difficult. 2 weeks seems like a short repayment period, Samantha explained to Davis. What happens if I can't repay the full amount when it's due? And what are my options for managing the repayment schedule? Davis became dismissive about repayment concerns, claiming that retail managers always had sufficient income for payday loan repayment and that extension options provided flexibility for any temporary payment difficulties. Ms. Thompson, retail managers have reliable income that makes payday loan repayment simple and straightforward. Davis insisted with apparent income assessment knowledge and repayment capability authority. If you need additional time, you can extend the loan by paying the $75 fee again, which provides complete flexibility for managing your repayment schedule. Davis also claimed that most customers found payday loan repayment easier than expected and that extension options were rarely needed for borrowers with steady management income. Samantha felt reassured by Davis's confidence about repayment, but decided to calculate the actual costs of loan extensions before committing to the payday loan agreement. Samantha researched payday loan extension costs and discovered that rolling over the loan multiple times would result in paying hundreds of dollars in fees while never reducing the original $500 principal balance. Samantha also learned that payday lenders often designed loan terms to encourage rollovers, and that many borrowers became trapped in cycles of debt by repeatedly extending loans they couldn't afford to repay. Samantha realized that Quick Cash Solutions was using rollover trap lending by making repayments seem manageable while designing loan terms that encouraged expensive extensions and debt cycles. Samantha decided not to take the payday loan and instead arranged a payment plan with her landlord while waiting for her insurance reimbursement, avoiding the potential debt trap of rollover fees. Samantha reported the rollover trap lending practices to her state's Payday lending regulatory agency and the Consumer Financial Protection Bureau. She learned that rollover traps were common payday lending tactics designed to maximize fee income. The authorities explained that payday loan rollovers often cost more than the original loan amount, and that borrowers should carefully calculate total extension costs before accepting short-term loan terms. Samantha learned that payday loans should only be used when borrowers are certain they can repay on time, and that extension options often lead to expensive debt cycles rather than providing genuine payment flexibility. The experience taught Samantha to calculate total loan costs, including potential extensions, and to explore alternatives like payment plans before accepting high-cost short-term lending that could create debt traps. Samantha now educates other retail workers about rollover trap lending and emphasizes the importance of understanding total loan costs and exploring alternatives before accepting payday loans with short repayment terms. David, a 26-year-old delivery driver, was searching for quick cash when he encountered an online service that would test his understanding of legitimate loan matching and teach him valuable lessons about lead generation payday loan scams. The service claimed to connect him with lenders, but was actually harvesting his personal information. David needed $300 for car repairs to maintain his delivery vehicle and was attracted to websites promising to match borrowers with multiple lenders for the best loan terms and approval rates. David found Loan Match Network through online advertising and was impressed by their promise to connect you with up to 20 lenders. Find your best loan offer. Free service with no obligations, which seemed ideal for comparing options. The website appeared professional with loan calculators and educational information about payday lending, along with a comprehensive application form requesting detailed personal and financial information for lender matching. David completed the application, providing his social security number, employment details, bank account information, and other personal data required for the lender matching service. Within minutes of submitting his application, David began receiving dozens of phone calls and text messages from various lenders and financial services companies offering loans, debt consolidation, and other financial products. The calls continued throughout the day from increasingly aggressive salespeople offering high-interest loans, debt relief services, and other financial products that seemed unrelated to David's original $300 loan request. Mr. Rodriguez, I'm calling about your loan application, and I can offer you up to $5,000 with guaranteed approval regardless of your credit situation, said one caller with apparent lending authority and approval guarantee expertise. Our lending program specializes in delivery drivers and other gig workers who need flexible loan terms. David was overwhelmed by the volume of calls and realized that his personal information was being shared with numerous companies rather than being matched with a specific lender for his requested loan amount. I only applied for a $300 loan, but I'm receiving calls about much larger loans and other services I didn't request, David explained to one of the callers. How did so many different companies get my information from one loan application? The caller became evasive about information sharing, claiming that loan matching services worked with networks of lenders and that David had consented to being contacted by multiple financial service providers. Mr. Rodriguez, loan matching services connect borrowers with multiple lenders and financial partners to ensure that you receive the best available offers. The caller insisted with apparent network operations knowledge and consent understanding. Your application consent allows our partner companies to contact you with relevant financial opportunities. David realized that he had never carefully read the consent terms and was concerned about how widely his personal information was being distributed to unknown financial service companies. David attempted to contact Loan Match Network to request removal of his information, but discovered that their customer service was unresponsive and that they had no clear process for stopping the distribution of his personal data. David researched loan matching services and learned that many lead generation companies sold borrower information to numerous lenders and financial service providers rather than actually matching borrowers with appropriate loans. David also discovered that his personal information was likely being sold to multiple companies and that he could expect continued marketing contacts from various financial service providers for months. David realized that Loan Match Network was operating a lead generation scam by collecting personal information under the pretense of loan matching while actually selling borrower data to multiple marketing companies. David contacted his bank to alert them about potential fraud attempts and changed his phone number to stop the overwhelming volume of marketing calls from unknown financial service companies. David reported the lead generation scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and his state's Consumer Protection Agency. He learned that loan matching scams were common and often resulted in identity theft risks. The authorities explained that legitimate loan applications should be submitted directly to licensed lenders and that borrowers should be cautious about providing personal information to lead generation services claiming loan matching. David obtained his needed car repair loan directly from his credit union at reasonable terms without sharing his personal information with multiple unknown financial service companies. The experience taught David to apply for loans directly with legitimate lenders and to carefully read consent terms before providing personal information to loan matching or lead generation services. David now educates other delivery drivers about lead generation loan scams and emphasizes the importance of working directly with established lenders rather than using services that claim to match borrowers with multiple lenders. Jennifer, a 29-year-old receptionist, was dealing with medical bills when she encountered a lender that would test her knowledge of legitimate lending regulations and teach her valuable lessons about unlicensed payday loan scams. The lender was operating without proper licensing and charging illegal interest rates. Jennifer needed $400 to pay medical bills from a recent urgent care visit and was looking for payday loan options that could provide quick approval without affecting her credit score or requiring lengthy applications. Jennifer found Express Money Lending through online classified ads and was attracted by their promise of no credit check, instant approval, best rates in town, which seemed ideal for her medical bill payment needs. The lender operated from a small office in a strip mall and appeared to be a local business specializing in short-term lending for working individuals who needed emergency cash assistance. Jennifer spoke with manager Wilson, who immediately offered her a $400 loan with what he claimed were competitive interest rates and flexible repayment terms designed for healthcare expense emergencies. Ms. Martinez, medical emergency loans are our specialty, and we can provide $400 immediately with our best interest rate of 45% monthly, Wilson said with apparent medical emergency expertise and competitive rate knowledge. This rate is much better than other payday lenders, and we offer flexible payment options for healthcare workers and other essential employees. Wilson explained that the 45% monthly rate was significantly lower than typical payday loan rates, and that Jennifer would repay $580 in 1 month, which seemed reasonable compared to other short-term lending options. Ms. Martinez, our 45% monthly rate is well below industry standards for emergency lending, and medical expense loans receive our lowest available rates. Wilson continued with apparent rate comparison knowledge and medical expense lending expertise. This rate reflects our commitment to helping working individuals manage healthcare costs without creating financial hardship. Wilson prepared loan documents showing the monthly repayment schedule and emphasized that Express Money Lending was a local business that understood community healthcare financing needs better than large national payday lenders. Jennifer was pleased with the apparently competitive rate, but wanted to verify that Express Money Lending was properly licensed and regulated before borrowing money from a lender she wasn't familiar with. I want to make sure you're properly licensed for payday lending in this state, Jennifer explained to Wilson. Can you provide your lending license number so I can verify your business registration and regulatory compliance? Wilson became evasive when Jennifer requested licensing information, claiming that small local lenders operated under different regulations and that his business was properly registered as a financial services company. Ms. Martinez, local lending businesses operate under financial services regulations rather than payday lending licenses, Wilson insisted with apparent regulatory knowledge and local business authority. Express Money Lending is properly registered and regulated as a financial services provider, which allows us to offer better rates than licensed payday lenders. Wilson also claimed that requesting licensing information was unnecessary because local businesses were more trustworthy than large corporate lenders, and that his competitive rates demonstrated legitimate business practices. Jennifer felt suspicious about Wilson's evasiveness regarding licensing and decided to research payday lending regulations before borrowing from an unlicensed lender. Jennifer contacted her state's financial regulatory agency to verify Express Money Lending's licensing status and learned that the business was not licensed for payday lending and was operating illegally. The regulatory agency also explained that Wilson's 45% monthly interest rate was equivalent to 540% annually, which exceeded legal limits for payday lending in her state and constituted usury. Jennifer realized that Express Money Lending was operating an unlicensed lending scam by charging illegal interest rates while avoiding regulatory oversight and consumer protections required for licensed lenders. Jennifer contacted Wilson to inform him that she had discovered his unlicensed status, but Wilson claimed that regulatory agencies were misinformed about local lending regulations and that his business was legitimate. Jennifer reported the unlicensed payday lending to her state's financial regulatory agency, the Attorney General's office, and local law enforcement. She learned that unlicensed lenders often charged illegal rates and provided no consumer protections. The authorities explained that legitimate payday lenders must be licensed and comply with state interest rate limits, and that borrowers should verify lender licensing before accepting loans from unknown companies. Jennifer obtained her needed medical bill funding through a personal loan from her credit union at legal interest rates with proper consumer protections and regulatory oversight. The experience taught Jennifer to verify lender licensing before borrowing and to be suspicious of lenders claiming exemptions from standard licensing requirements or offering rates that seem too good to be true. Jennifer now educates other healthcare support workers about unlicensed lending scams and emphasizes the importance of borrowing only from properly licensed and regulated financial institutions. Robert, a 34-year-old maintenance technician, was experiencing a family emergency when he encountered a lender that would test his understanding of legitimate loan documentation and teach him valuable lessons about loan flipping payday loan scams. The lender was manipulating loan terms to maximize fees and trap borrowers. Robert needed $600 for emergency travel to visit a sick family member and was working with a payday lender that claimed to offer flexible emergency lending for family crisis situations. The lender, Family Emergency Loans, specialized in crisis lending and advertised understanding of family emergency financial needs with compassionate lending practices for working individuals facing personal crises. Robert spoke with loan counselor Adams, who expressed sympathy for Robert's family situation and offered immediate assistance with emergency funding designed specifically for family crisis circumstances. Mr. Jackson, family emergencies require immediate financial response, and our crisis lending program provides $600 immediately with understanding and flexible terms, Adams said with apparent crisis lending expertise and family emergency compassion. We understand that family situations create urgent financial needs that can't wait for traditional lending approval processes. Adams explained that the initial loan would have a $90 fee for 2 weeks, but that family emergency loans qualified for special refinancing options if Robert needed additional time or funding for extended family care. Mr. Jackson, family crisis situations often require extended financial support, so our emergency loans include refinancing options that provide additional time and funding as your family situation develops. Adams continued with apparent family crisis knowledge and extended support options. This flexibility ensures that family emergencies don't create additional financial stress during difficult personal times. Robert appreciated Adams's understanding approach and accepted the emergency loan. But when repayment became difficult due to extended family care responsibilities, Adams offered refinancing that seemed designed to help, but actually increased Robert's debt. Mr. Jackson, I understand that your family situation has extended longer than expected, and we can refinance your loan to provide additional funding and payment flexibility, Adams explained when Robert called about repayment difficulties. We can increase your loan to $800 and extend your repayment time while adding only minimal additional fees for the expanded emergency assistance. The refinancing involved paying $120 in fees while increasing Robert's principal debt to $800, which Adams presented as providing Robert with additional cash and payment relief during his family crisis. Robert was grateful for the apparent flexibility, but began to realize that each refinancing increased his debt while providing less additional cash, creating a pattern where fees consumed most of the loan value. The refinancing seems to increase my debt more than it helps with additional cash, Robert explained to Adams. Can you explain how these refinancing options are designed to help borrowers rather than increasing their debt obligations? Adams became defensive when Robert questioned the refinancing structure, claiming that family emergency lending required specialized approaches and that Robert was receiving exceptional assistance during his personal crisis. Mr. Jackson, family emergency lending involves unique challenges that require flexible solutions, Adams insisted with apparent emergency lending expertise and crisis assistance authority. The refinancing options provide you with continued access to emergency funds while managing your family responsibilities, which is specialized assistance not available through traditional lending. Adams also claimed that Robert's family situation justified the refinancing fees and that the additional debt was necessary to maintain emergency funding during an extended family crisis. Robert felt manipulated by Adams's use of his family situation to justify increasing debt and decided to research the actual costs and structure of the repeated refinancing offers. Robert calculated that he had paid over $400 in fees, while his principal debt had increased from $600 to $1,200, meaning that the refinancing was costing him more money while increasing rather than reducing his debt obligations. Robert also researched loan flipping practices and learned that some lenders deliberately designed refinancing to trap borrowers in increasing debt cycles while using emotional situations to justify the manipulative lending practices. Robert realized that family emergency loans was using loan flipping tactics by manipulating his family crisis to justify repeatedly refinancing his debt in ways that benefited the lender while harming Robert financially. Robert contacted a consumer attorney who helped him understand his rights and options for addressing the predatory refinancing practices that had increased his debt while providing minimal actual assistance. Robert reported the loan flipping practices to his state's lending regulatory agency and the Consumer Financial Protection Bureau. He learned that loan flipping was a predatory practice that targeted borrowers during vulnerable situations. The authorities explained that legitimate emergency lending provides clear repayment options without manipulative refinancing designed to increase borrower debt and maximize lender fee income. Robert worked with a credit counselor to develop a plan for repaying his debt and avoiding future predatory lending situations during financial emergencies or personal crises. The experience taught Robert to carefully analyze refinancing offers and to be suspicious of lenders who use emotional situations to justify lending practices that increase debt rather than providing genuine assistance. Robert now educates other maintenance workers about loan flipping scams and emphasizes the importance of understanding loan costs and seeking legitimate emergency assistance during family crises rather than accepting predatory refinancing offers. Linda, a 37-year-old home health aide, was facing unexpected expenses when she encountered an online lender that would test her knowledge of legitimate online lending and teach her valuable lessons about data harvesting payday loan scams. The lender was collecting her personal information for identity theft rather than providing actual loans. Linda needed $450 for home repairs and was attracted to online payday lending that promised convenience and quick approval without requiring visits to physical storefronts or lengthy paperwork processes. Linda found Online Cash Express through web advertising and was impressed by their professional website featuring security badges, customer testimonials, and detailed information about their online lending process and approval procedures. The loan application was comprehensive and requested extensive personal information, including social security number, driver's license details, employment verification, bank account information, and references for identity verification and loan approval. Complete our secure online application for immediate loan approval. Your information is protected by bank-level security and used only for loan processing, the website stated with apparent security assurance and information protection guarantees. Linda completed the detailed application and received an immediate email confirmation stating that her application was being processed and that she would receive loan approval and funding information within 24 hours. However, instead of loan approval, Linda began receiving suspicious emails and phone calls from various companies claiming to offer financial services, debt consolidation, and other products that seemed unrelated to her original loan application. Linda also noticed unauthorized credit inquiries appearing on her credit report from multiple financial companies that she had never contacted or authorized to review her credit information. Ms. Foster, I'm calling about your recent financial application, and I can help you with debt consolidation services that will improve your credit and reduce your monthly payments, said one caller with apparent debt services expertise and credit improvement authority. Linda realized that her personal information was being used by multiple companies and that Online Cash Express had never actually provided any loan approval or funding despite collecting comprehensive personal and financial information. I applied for a payday loan but never received any loan approval or funding, Linda explained to one of the callers. How did you get my information, and why are multiple companies contacting me about services I didn't request? The caller became evasive about information sources, claiming that financial service companies shared information to provide customers with relevant opportunities and that Linda had consented to being contacted by partner companies. Ms. Foster, financial service companies work together to provide customers with comprehensive financial solutions. The caller insisted with apparent industry cooperation knowledge and customer service authority. Your application consent allows partner companies to contact you with relevant financial services that can help improve your financial situation. Linda realized that Online Cash Express was collecting personal information under the pretense of loan processing while actually harvesting data for sale to marketing companies and potential identity theft purposes. Linda attempted to contact Online Cash Express to request removal of her information, but discovered that their customer service was non-functional and that they provided no legitimate contact information for addressing data concerns. Linda checked her credit reports and discovered multiple unauthorized inquiries and attempts to open accounts using her personal information, confirming that her data had been compromised through the fake loan application. Linda contacted her bank and credit card companies to alert them about potential fraud and placed fraud alerts on her credit reports to prevent unauthorized account openings using her stolen information. Linda reported the data harvesting scam to the Federal Trade Commission, the Internet Crime Complaint Center, and her state's Attorney General office. She learned that fake online loan applications were commonly used for identity theft. The authorities explained that legitimate online lenders provide actual loan decisions and funding rather than simply collecting personal information for sale to third parties or identity theft purposes. Linda learned that online loan applications should only be submitted to established, licensed lenders and that borrowers should be suspicious of lenders who collect extensive information without providing actual loan services. The experience taught Linda to research online lender legitimacy before providing personal information and to be cautious of loan applications that request more information than necessary for legitimate lending decisions. Linda now educates other home health workers about data harvesting loan scams and emphasizes the importance of protecting personal information when applying for online loans and verifying lender legitimacy before sharing financial data. Patricia, a 32-year-old office assistant, was consolidating debt when she encountered a service that would test her understanding of legitimate debt consolidation and teach her valuable lessons about fake debt relief payday loan scams. The service claimed to eliminate payday loan debt through government programs. Patricia had multiple payday loans totaling $2,400 and was struggling with the rollover fees and high interest rates that made repayment difficult despite her steady office job and careful budgeting efforts. Patricia received a phone call from Payday debt relief specialists, offering government-backed debt elimination services specifically designed for borrowers trapped in payday loan cycles. The caller, who identified himself as Debt Relief Coordinator Thompson, claimed that new federal legislation provided debt forgiveness for payday loan borrowers who qualified based on income and financial hardship criteria. Ms. Rodriguez, The Payday Loan Relief Act allows qualifying borrowers to eliminate payday loan debt through federal debt forgiveness programs, Thompson said with apparent government program authority and debt elimination expertise. Your income level and debt situation make you eligible for complete payday loan debt elimination through this specialized federal assistance program. Thompson explained that the debt relief program required Patricia to stop making payments to her payday lenders while his company negotiated with lenders and processed her application for federal debt forgiveness benefits. Ms. Rodriguez, the Payday Loan Relief Act requires borrowers to suspend payments to payday lenders while the federal forgiveness application is being processed. Thompson continued with apparent federal program procedures and application processing knowledge. This suspension prevents additional fees and interest while ensuring that your debt qualifies for maximum forgiveness under the federal assistance program. Thompson requested a processing fee of $695 to begin Patricia's debt forgiveness application and coordinate with federal agencies responsible for administering payday loan debt relief benefits. Patricia was hopeful about debt elimination but was suspicious about paying upfront fees for government debt relief programs that she believed should be available without processing costs. I'm interested in debt relief, but I don't understand why there would be processing fees for a federal program, Patricia explained to Thompson. Can you provide documentation about this government program that I can review independently? Thompson became evasive when Patricia requested program documentation, claiming that the Payday Loan Relief Act was new legislation and that detailed information was only available through authorized debt relief specialists like his company. Ms. Rodriguez, the Payday Loan Relief Act is recent federal legislation that is administered through authorized debt relief companies rather than direct government agencies. Thompson insisted with apparent authorized service provider authority and federal program administration knowledge. Our company is authorized to process applications and coordinate with federal agencies to ensure that qualifying borrowers receive maximum debt elimination benefits. Thompson also claimed that processing fees were required by federal regulations to prevent fraudulent applications and that legitimate debt relief required upfront payment to demonstrate borrower commitment to the program. Patricia felt pressured by Thompson's federal authority claims but decided to research payday loan debt relief programs before paying processing fees for services that claimed government backing. Patricia contacted the Consumer Financial Protection Bureau to verify federal payday loan debt relief programs and learned that no Payday Loan Relief Act existed and that legitimate debt relief didn't require upfront fees. The CFPB representative also explained that stopping payments to payday lenders could result in additional fees and collection actions, and that legitimate debt relief involved working directly with lenders rather than through third-party companies claiming government authority. Patricia realized that Thompson was operating a fake debt relief scam by claiming non-existent government programs while collecting upfront fees for services that would likely make her debt situation worse rather than better. Patricia contacted Thompson to inform him that she had verified his program as fraudulent, but discovered that the phone number was disconnected and that payday debt relief specialists had no legitimate business registration. Patricia reported the fake debt relief scam to the Consumer Financial Protection Bureau, the Federal Trade Commission, and her state's Attorney General office. She learned that debt relief scams often targeted payday loan borrowers with promises of government assistance. The authorities explained that legitimate debt relief involved working with nonprofit credit counseling agencies and that government debt forgiveness programs for payday loans did not exist despite scammer claims about federal assistance. Patricia worked with a legitimate nonprofit credit counseling agency to develop a debt management plan that helped her negotiate with payday lenders and establish affordable repayment arrangements without upfront fees. The experience taught Patricia to verify debt relief programs through official government sources and to be suspicious of companies claiming government authority while requesting upfront fees for debt elimination services. Patricia now educates other office workers about fake debt relief scams and emphasizes the importance of working with legitimate nonprofit credit counseling agencies rather than paying companies claiming government debt forgiveness programs. Michael, a 30-year-old security guard, was looking for emergency funding when he encountered a tribal lender that would test his understanding of legitimate tribal lending and teach him valuable lessons about predatory tribal payday loan scams. The lender claimed sovereign immunity from state lending regulations. Michael needed $750 for emergency dental treatment and was attracted to tribal lending advertising that promised approval for borrowers who had been denied by traditional payday lenders due to credit or income restrictions. The tribal lender, Sovereign Nation Loans, advertised, "Tribal sovereignty means better rates. No state restrictions. Guaranteed approval for all borrowers," which seemed to offer advantages over regulated state-licensed payday lenders. Michael spoke with tribal loan specialist Davis, who explained that tribal sovereignty allowed them to provide lending services outside of state regulations and that Michael qualified for their premium lending program. Mr. Santos, tribal sovereignty allows us to provide lending services that aren't restricted by state payday loan regulations, Davis said with apparent sovereign authority and regulatory exemption knowledge. This means we can offer better terms and approve borrowers who have been denied by state-regulated lenders due to restrictive regulations. Davis offered Michael a $750 loan with a 30% monthly interest rate, claiming this was significantly better than state-regulated payday lenders and that tribal lending provided superior terms due to sovereign nation status. Mr. Santos, our 30% monthly rate is much better than the 45 to 60% rates charged by state-regulated payday lenders. Davis continued with apparent rate comparison knowledge and tribal lending benefits. Tribal sovereignty allows us to provide competitive rates while offering guaranteed approval regardless of your credit history or previous payday loan experience. Davis emphasized that tribal loans were backed by sovereign nation authority and that borrowers received better treatment and more flexible terms compared to dealing with corporate payday lenders operating under restrictive state regulations. Michael was attracted by the apparently better rates and guaranteed approval, but wanted to understand the legal implications of borrowing from a tribal lender and whether state consumer protections would apply. "I want to understand what protections I have as a borrower and whether state consumer laws apply to tribal lending," Michael explained to Davis. "Can you explain how tribal sovereignty affects my rights and protections as a loan customer?" Davis became evasive when Michael asked about consumer protections, claiming that tribal lending provided superior customer treatment and that sovereign nation status ensured fair dealing without requiring state regulatory oversight. Mr. Santos, tribal lending operates under sovereign nation principles that prioritize fair customer treatment and ethical lending practices. Davis insisted with apparent sovereign principles authority and ethical lending claims. Tribal sovereignty ensures that borrowers receive respectful treatment and fair terms without the bureaucratic restrictions that limit state-regulated lenders. Davis also claimed that tribal lending disputes were handled through traditional tribal justice systems that provided faster and fairer resolution than state court systems used for disputes with traditional lenders. Michael felt concerned about Davis's vagueness regarding consumer protections, but was pressured by his dental emergency and the promise of guaranteed approval that other lenders had denied. Michael accepted the tribal loan, but later discovered that the actual annual percentage rate was over 360% and that the loan terms included automatic renewal clauses that he hadn't understood from Davis's explanation. Michael also learned that tribal lending disputes had to be resolved through tribal arbitration systems that were expensive to access and heavily favored the lenders rather than providing the fair resolution Davis had promised. Michael realized that Sovereign Nation Loans was using predatory tribal lending practices by charging excessive rates while claiming sovereign immunity from state consumer protection laws that would have prevented such exploitative terms. Michael contacted consumer advocates and learned that many tribal lenders operated predatory practices while using sovereignty claims to avoid state regulations designed to protect borrowers from excessive interest rates and unfair lending terms. Michael also discovered that legitimate tribal lenders operated ethically within reasonable rate ranges and that predatory tribal lenders often had questionable connections to actual tribal nations despite their sovereignty claims. Michael reported the predatory tribal lending to the Consumer Financial Protection Bureau, his state's Attorney General office, and tribal nation regulatory authorities. He learned that tribal lending was often used as a cover for predatory practices. The authorities explained that legitimate tribal lending should provide fair terms and that borrowers should be cautious of tribal lenders charging excessive rates while claiming immunity from all consumer protection regulations. Michael worked with consumer advocates to address his predatory loan and learned about legitimate emergency dental financing options that provided fair terms without exploiting sovereign immunity claims. The experience taught Michael to research tribal lenders carefully and to be suspicious of lenders claiming sovereignty as justification for charging excessive rates or avoiding standard consumer protection requirements. Michael now educates other security professionals about predatory tribal lending and emphasizes the importance of understanding loan terms and consumer protections before accepting loans from lenders claiming regulatory exemptions. Karen, a 25-year-old waitress, was dealing with seasonal income reduction when she encountered a lender that would test her knowledge of legitimate income verification and teach her valuable lessons about no-verification payday loan scams. The lender promised approval without income documentation but charged excessive fees. Karen's restaurant hours had been reduced during slow season, and she needed $350 to cover utilities while waiting for hours to increase, making her interested in lenders that didn't require extensive income verification for small emergency loans. Karen found no questions asked loans through online advertising promising no income verification, no job confirmation, get cash based on your word alone, which seemed perfect for her temporary income reduction situation. The lender operated through a website and phone system that required minimal information and promised immediate approval based on borrower statements rather than requiring employer verification or income documentation. Karen spoke with approval specialist Johnson, who immediately confirmed that she qualified for emergency lending without requiring pay stubs, employment verification, or detailed financial documentation. Ms. Williams, our no-verification lending program provides emergency cash for working individuals who need immediate assistance without bureaucratic paperwork requirements, Johnson said, with apparent streamlined lending expertise and paperwork elimination benefits. We approve loans based on your word and basic information rather than requiring extensive documentation that delays emergency assistance. Johnson offered Karen a $350 loan with a $125 fee due in 2 weeks, explaining that no verification lending required higher fees to compensate for the streamlined approval process and reduced documentation requirements. Ms. Williams, no verification lending involves higher fees because we're providing emergency assistance without requiring the documentation that traditional lenders use to assess risk. Johnson continued with apparent risk assessment knowledge and fee justification expertise. The $125 fee reflects the convenience and speed of approval that allows you to get emergency cash without paperwork delays. Johnson emphasized that the no-verification approach was designed specifically for service industry workers who had variable income and difficulty providing standard employment documentation required by traditional payday lenders. Karen was pleased with the quick approval but was concerned about the high fee that represented over 35% of the loan amount and wanted to understand why no verification lending required such expensive fees. The $125 fee seems very high for a $350 loan, Karen explained to Johnson. Can you explain why no verification lending costs so much more than traditional payday loans that require documentation? Johnson became defensive when Karen questioned the fee structure, claiming that no verification lending was a premium service that provided convenience and accessibility not available through traditional lending approaches. Ms. Williams, no verification lending is a premium service that provides immediate cash access without the paperwork barriers that prevent service workers from obtaining emergency assistance, Johnson insisted, with apparent premium service authority and accessibility benefits knowledge. The higher fee reflects the convenience and risk acceptance that allows us to provide emergency funds based on your word alone. Johnson also claimed that traditional payday lenders would deny Karen's application due to her reduced income situation and that no verification lending was her only option for emergency cash assistance. Karen felt pressured by Johnson's claims about limited options, but decided to research traditional payday lending requirements before accepting such expensive no-verification lending terms. Karen contacted several licensed payday lenders and discovered that most required basic employment verification but would accept reduced hours documentation and that their fees were significantly lower than the no-verification lenders' charges. Karen also learned that no-verification lenders often charged excessive fees, while providing no additional benefits compared to traditional lenders who required minimal documentation for small emergency loans. Karen realized that no questions asked loans was using no verification as a marketing tactic to justify charging excessive fees while providing no genuine advantages over traditional payday lending that required basic documentation. Karen obtained her emergency funding through a licensed payday lender that accepted her current employment verification and charged a $45 fee instead of the $125 fee quoted by the no verification lender. Karen reported the excessive fee no verification lending to her state's Payday lending regulatory agency and the Consumer Financial Protection Bureau. She learned that no verification was often used to justify predatory fee structures. The authorities explained that legitimate payday lending required minimal documentation and that no verification was often a marketing tactic used to justify charging excessive fees rather than providing genuine convenience benefits. Karen learned that service industry workers could typically qualify for traditional payday lending with basic employment documentation and that no verification promises often concealed predatory fee structures. The experience taught Karen to compare fee structures between different lenders and to be suspicious of lenders claiming premium services that justified charging significantly higher fees than standard lending options. Karen now educates other restaurant workers about no verification loan scams and emphasizes the importance of comparing fees and understanding that minimal documentation requirements are standard for legitimate payday lending. Timothy, a 35-year-old truck driver, was managing irregular income when he encountered a lender that would test his understanding of legitimate repayment scheduling and teach him valuable lessons about balloon payment payday loan scams. The lender offered low initial payments that concealed large final payments. Timothy's trucking income varied seasonally and he needed $800 for truck maintenance, making him interested in flexible repayment options that could accommodate his irregular income patterns and seasonal cash flow variations. The lender, Flexible Payment Solutions, advertised low monthly payments, payment plans that fit your income, no large upfront costs, which seemed ideal for Timothy's variable income truck driving situation. Timothy spoke with payment coordinator Davis, who offered a payment plan with 4 monthly payments of $75 each, followed by a final payment that seemed manageable for Timothy's trucking income patterns. Mr. Thompson, our flexible payment plan allows truck drivers to manage emergency expenses with low monthly payments that fit your variable income schedule, Davis said with apparent trucking industry knowledge and income flexibility expertise. The payment plan spreads your loan costs over several months with payments that accommodate seasonal income variations. Davis explained that the payment plan was specifically designed for transportation workers who had irregular income and needed financing options that didn't strain their budgets during slow earning periods. Mr. Thompson, transportation industry workers need specialized financing that understands seasonal income variations and provides payment flexibility during low earning months. Davis continued with apparent industry expertise and seasonal income accommodation knowledge. This payment plan ensures that your truck maintenance doesn't create financial stress during income fluctuation periods. Davis prepared loan documents showing 4 monthly payments of $75 followed by a final payment. But the final payment amount was listed in small print as $1,200, which Timothy didn't notice during the initial payment discussion. Timothy was pleased with the low monthly payments and signed the loan documents, focusing on the manageable $75 monthly amounts rather than carefully reviewing the final payment terms shown in the contract fine print. However, when Timothy's 4th monthly payment was due, Davis contacted him to remind him that his final payment of $1,200 was due the following month, which Timothy hadn't expected based on their initial payment discussion. Mr. Thompson, your final balloon payment of $1,200 is due next month to complete your loan agreement, Davis explained when Timothy called about the unexpected large payment. The payment plan structure includes monthly payments followed by a final balloon payment that completes the loan obligation. Timothy was shocked by the large final payment that he hadn't anticipated and couldn't afford based on his current income situation, making him realize that he had misunderstood the loan terms during the initial discussion. I didn't understand that there would be such a large final payment, Timothy explained to Davis. The monthly payments seemed manageable, but I can't afford a $1,200 balloon payment based on my current income. Davis became unsympathetic when Timothy expressed concern about the balloon payment, claiming that the loan documents clearly specified the payment structure and that Timothy had agreed to all terms by signing the contract. Mr. Thompson, the loan documents clearly show the payment structure, including the final balloon payment. Davis insisted with apparent contract authority and payment obligation knowledge. You agreed to these terms by signing the contract, and the balloon payment is a standard part of flexible payment loan structures. Davis also claimed that balloon payments were common in commercial lending for transportation workers, and that Timothy should have understood the payment structure before agreeing to the loan terms. Timothy felt deceived by the balloon payment structure that had been concealed during the initial payment discussion and realized that the loan was designed to create repayment problems rather than providing genuine payment flexibility. Timothy researched balloon payment lending and learned that balloon payment structures often trapped borrowers who couldn't afford large final payments and were designed to generate refinancing fees when borrowers couldn't meet final payment obligations. Timothy also discovered that legitimate flexible payment plans typically involved equal monthly payments rather than low initial payments followed by large balloon payments that most borrowers couldn't afford. Timothy realized that flexible payment solutions was using balloon payment scam tactics by concealing large final payments while emphasizing low monthly payments that made the loan seem affordable and manageable. Timothy contacted a consumer attorney who helped him understand his options for addressing the deceptive balloon payment loan structure that had concealed the true cost and payment requirements. Timothy reported the balloon payment lending scam to his state's lending regulatory agency and the Consumer Financial Protection Bureau. He learned that balloon payment structures were often used to deceive borrowers about actual loan costs. The authorities explained that legitimate flexible payment plans involved clear disclosure of all payment amounts, and that balloon payment structures should be clearly explained rather than concealed in contract fine print. Timothy worked with consumer advocates to address the deceptive loan terms and learned about legitimate truck financing options that provided genuine payment flexibility without balloon payment traps. The experience taught Timothy to carefully review all payment terms and loan contracts, and to be suspicious of lenders emphasizing low initial payments without clearly explaining final payment obligations. Timothy now educates other truck drivers about balloon payment loan scams and emphasizes the importance of understanding complete payment structures rather than focusing only on initial monthly payment amounts. Angela, a 31-year-old pharmacy technician, was consolidating expenses when she encountered a service that would test her knowledge of legitimate loan brokering and teach her valuable lessons about phantom lender payday loan scams. The service claimed connections to exclusive lenders but collected fees without providing actual loans. Angela had multiple small debts totaling $1,200 and was interested in consolidating them through a single payday loan that could simplify her payments and provide immediate debt relief through professional loan arrangement services. Angela found premium loan brokers through online advertising promising exclusive lender network, guaranteed approval, professional loan arrangement for challenging credit situations, which seemed ideal for her debt consolidation needs. The service operated through phone consultations and claimed to work with exclusive lenders who provided specialized lending for healthcare workers and other essential professionals with challenging credit or debt situations. Angela spoke with senior loan broker Martinez, who immediately assured her that premium loan brokers could arrange a $1,200 consolidation loan through their exclusive lender network that specialized in healthcare professional lending. Ms. Johnson, our exclusive lender network specializes in healthcare worker lending and can provide a $1,200 consolidation loan with competitive terms designed specifically for pharmacy technicians and other medical professionals, Martinez said with apparent healthcare lending expertise and professional specialization knowledge. These exclusive lenders understand healthcare income patterns and provide specialized lending not available through traditional payday lenders. Martinez explained that accessing the exclusive lender network required a broker fee of $295 to cover application processing and lender coordination, but that the specialized lending terms would save Angela money compared to traditional consolidation options. Ms. Johnson, The broker fee covers application processing with multiple exclusive lenders and coordination services that ensure you receive the best available terms for healthcare professional lending. Martinez continued with apparent broker services knowledge and coordination benefits expertise. The specialized terms from our exclusive lenders typically save borrowers hundreds of dollars compared to standard consolidation loans. Martinez promised that Angela would receive loan approval and funding within 48 hours of paying the broker fee, and that the exclusive lender terms would provide better rates and repayment options than she could obtain independently. Angela was interested in professional lending specialization, but was cautious about paying broker fees upfront and wanted to understand what guarantees existed for receiving actual loan approval and funding after paying the fee. "I'm interested in specialized lending, but I want to understand what happens if I pay the broker fee and don't receive loan approval," Angela explained to Martinez. "What guarantees do I have that paying the fee will result in actual loan funding?" Martinez became evasive when Angela asked about guarantees, claiming that exclusive lender access required upfront payment and that legitimate borrowers understood the necessity of broker fees for accessing specialized lending networks. "Ms. Johnson, exclusive lender networks require broker fees to ensure serious applications and prevent frivolous inquiries that waste lender resources," Martinez insisted, with apparent exclusive access authority and serious borrower requirements. Healthcare professionals understand that specialized lending requires professional arrangement services that justify the broker fee investment. Martinez also claimed that the exclusive lenders only worked through premium loan brokers and that Angela couldn't access their specialized healthcare lending terms without paying the broker fee for professional loan arrangement services. Angela felt pressured by Martinez's claims about exclusive access, but decided to research loan brokering practices before paying upfront fees for loan arrangement services. Angela researched premium loan brokers online and discovered numerous complaints from customers who paid broker fees but never received promised loan approvals or funding from the claimed exclusive lender network. Angela also learned that legitimate loan brokers typically earn commissions from successful loan placements rather than charging upfront fees, and that exclusive lender claims were often used to justify advance fee fraud schemes. Angela realized that premium loan brokers was operating a phantom lender scam by collecting broker fees while having no actual lender network or ability to arrange the promised consolidation loans. Angela contacted Martinez to inform him that she had discovered the phantom lender scam, but found that the phone number was disconnected and that premium loan brokers had no legitimate business registration or contact information. Angela reported the phantom lender scam to the Federal Trade Commission, the Consumer Financial Protection Bureau, and her state's lending regulatory agency. She learned that loan brokering scams often targeted people seeking debt consolidation. The authorities explained that legitimate loan brokers earned commissions from successful placements and that upfront broker fees were typically indicators of advance fee fraud rather than legitimate brokering services. Angela obtained debt consolidation through a legitimate financial institution that provided actual loan approval and funding without requiring upfront broker fees or claiming exclusive lender access. The experience taught Angela to be suspicious of loan brokers requiring upfront fees and to verify broker legitimacy before paying for loan arrangement services that might not result in actual funding. Angela now educates other pharmacy technicians about phantom lender scams and emphasizes the importance of working directly with legitimate lenders rather than paying brokers claiming exclusive access to specialized lending networks.